Welcome to the Techno Fundamental Report for October the 9th. As a bull market continues, almost anything you buy goes up. It makes you feel that investing in stocks is a very easy and safe, and that you're a financial genius. You know, it's been a great market, I'll be honest with you guys. This has been strong. So just remember the cycle. You start out with euphoria and greed. Then you get into anxiety and denial, then fear and panic. So in other words, you go through a cycle here. Fear and panic, despair and depression, and then it all turns back to hope and optimism. So just remember that you're going to go through a cycle here that could become difficult, hopefully not. So far so good. Take it a day at a time. Again, I want to emphasize this study that I've talked about many times in the past. It's about how stocks generally perform. And the bottom line is, and this was a study done by J.P. Morgan Asset Management. They took the Russell 3000 over an extended period of time where they went through it, a bull market, two bear markets, and then another bull market. And what they basically found out was that only 7% of the 3,000 stocks in the Russell 3000 drove the returns of the index. So the bottom line is that you've got to be a stock picker. You got to know how to pick them. Now, let's talk about market capitalization for a minute. Now, I'm going to jump ahead here a second. Peter Lynch was very big on finding what he called the 10-bagger. And he did. You know, back in the 70s, he invested in Walmart. Realized with Walmart, $10,000 investment in Walmart in October of 1970 when it went public is now worth $23 million today. So this was Peter Lynch's big 10-bagger. In fact, it was much more than a 10-bagger. But if he would not have found Walmart, you wouldn't even know about this guy. So pause your video player, take a look at some of this information, but just remember, Peter Lynch's involvement with Walmart stock was a key aspect of his investment success and a demonstration of his principle to buy what you know. So he was incredibly successful because he found a 10-bagger. So let's think about this for a minute. I think the most important number you can look at on investing in companies is what is the investment potential. And so when you start looking at the fact that NVIDIA is now at a $4 trillion valuation, you have to ask the question, can I double my money in this? Because if you double your money in this in over a 5-year period, that's about 15% return. Well, I think for the risk you're taking, I think you should expect that. But think about it this way. Market capitalization is the total dollar market value of a company's outstanding shares of the stock, commonly referred to as market cap. So if this was a 10-bagger, that would mean $40 trillion. And if you look, the total global market is it hit a peak here recently of 90 trillion, currently about 75 trillion. So is NVIDIA going to become the whole market? I don't know. I'd have to think hard and long about it. Now, we talked a lot about historic figures. William Delbert W.D. Gann operated between 1878 and 1955. Now, his work was not my kind of thing because he got into predicting. His work used geometry, time cycles, and ancient mathematics, which really means astronomy. So this guy, and he was successful, mainly in giving teaching courses, about how to predict the future of the market, the truth. He wrote a book called The Truth of the Stock Tape, where he's trying to predict the future. I kind of personally feel this is futile. Now, one other thing about these guys that operated back in the 1900s, 20s, and 30s, there was a lot of stock manipulation going on. And in my personal opinion, I still think it is going on. And, if you ever want to talk about it, let me know. But I do think that there are manipulative activities going on in the market even today. So the best thing I have found was to read How to Make Money in Stocks, where I started to learn about a concept called trend following. Now, William O'Neill pretty much developed Investors Business Daily as a newspaper, and he was a trend follower. Now, he also was a fundamentalist. He said you have to have a strong product or story. You have to have something, in my opinion, what you want is something that the masses want, like Walmart. The masses want Walmart. iPhones, everybody wants an iPhone. So you got to have a strong product, superior sales and earnings growth. He's looking for companies that are growing their earnings above 25% to 30%. High profit margins. He wants to see 20% in most recent quarters. Institutional sponsorship. This is very important. In other words, you think about it. If the institutions drive 80 to 90% of the volume on the exchanges, you better darn well pay attention to what they're doing. And then you want leadership. In other words, Jesse Livermore always talked about how he would launch a campaign where he was not just looking for leadership, he was looking for the true leadership. So that's very important. Walter Deemer was a trend follower. He says, when the time comes to buy, you won't want to. So, for example, here we are. This is the current situation with the primary trend. We really wanted to try to get people to buy in here, and we really worked hard at it because we saw that low come in, then we got the follow-through period, and then we made a higher low. Now we're making a higher high. But this is the most hated bull market I've seen in a long time. So what Deemer's saying is, when you should be buying, you won't want to because you're scared. Now let's look at what we're doing right now. Okay, this is the NASDAQ. You can see continuing in a very nice uptrend, making new highs, holding above the moving averages. Everything is positive. You can only take this a day at a time. This may change next week. S&P 500, same thing, making new highs. Very strong trend. Now, based on our demographic studies, we feel like the economy is going to stay strong for probably the next 10 years. So that could mean that the market's going to continue to make new highs for the next 10 years, but there'll be wiggles along the way and waggles along the way. Now, this is the aggression index where we're comparing technology to consumer staples, making another all-time high. This is very strong market here. This is incredibly strong. Interest rates, I went ahead and went with the 10-year Treasury instead of the 5-year Treasury, and look at the reaction here. We're seeing interest rates are really starting to come down. So if you really boil it down, the two most important economic components to be aware of is corporate earnings and interest rates. And right now, interest rates are definitely in a downtrend. Look at oil. Now, if we thought inflation was going to be a big issue, don't you think the price of oil would be going up? It is in a very definite downtrend. In fact, it recently made a relative low here and continues to decline. I would not be surprised. Now look back here. You had oil back here in 21. You had oil down to $30, $40 a barrel. It would not surprise me if this didn't break down further. But this is a downtrend. Don't fight the trend. The trend is your friend. Now, like I said, this is the most hated bull market. Here we are. The market's having a really good year, and you've only got a minuscule amount of bulls versus bears. So the sentiment continues to be complacent. If we get back into this period here, like we saw back in these days, it's just going to become very apparent that the market's put in a bottom. So if you have any questions, please let me know. Thank you very much.